Hello everyone, welcome to Fiscal Capital. If you are into investment world, you have been hearing from very famous investors and advisors that Warren Buffett's latest shareholders has really helped them in becoming a much better and more rational investor. To understand what is actually inside these letters, we have started this video series. Here we are going to explain each and every Buffett letters in one episode of this series. Today we are going to discuss about the classic 1957 letter. Before diving into the letter, we have to understand terms which he has answered in the way. One is general issue and other is workout. So what is general issue? General issue is basically investing in companies which are undervalued based on their fundamentals. The stock price is lower than the intrinsic value of the company. He is to buy those, and that's what he called a general issue. Second was workout portfolio. Workout portfolio means not investing based on fundamentals or broader market trends, but focusing on the special actions being conducted in a particular company, like mergers, acquisition, corporate earnings fall, quarterly results, etc. So he used to focus on those opportunities and used to trade them. With these concepts, let's dive into the later. And the later we are going to explain 7 things which Warren Buffett has explained in the book. To begin with, the first part was Warren Buffett said market has moderately declined in 1957. And this is what he has already predicted in 1956. In the letter, he has mentioned that in 1956 later, he has explained to the investors that market is actually trading above its intrinsic value and there is a good expectation that it may decline. Here are 2 things to understand. One is he has predicted that market will go down, but still he did take off any of his position, but even invested. That means that he doesn't really care about short term because he has a clear vision and investment philosophy in his mind. Second aspect is again related to the first one. So he said that market has moderately declined. Whereas other investors at that time who just started investing was believing that market has declined significantly. Why he was saying is, and what we have to understand. First thing he said that the corporate earnings of the companies and industry is much lower than the results are showing. So what he means to say that market is actually think and hold that really that even in such a declined economy, the trading of shares is at a higher. Now, obviously, this can't stay for longer. So he was expecting further decline. So here we can understand the similar markets here. There are companies which are doing better in their quarterly results, but still market is down. So sometimes you have to understand that market is not completely rational. And that's why even if our investments are in good company, and still if they are going down, that doesn't mean that we are not seeing something which market is seeing. There could be another way around. The market is good of irrational investors who don't know much about fundamentals and just based on panic selling. They have joined the rally and started selling good companies. As third point was one of the good investment approach he has suggested. So Buffett said that he won for general issues purchase and market is in decline, but focus more on workout portfolio. Market is at a bull. Basically, he is suggesting that we should invest more and more in the companies with good fundamentals when market is in decline because it makes the stocks much more attractive than they were before. So basically, let's say you have a stock which you have bought at 500 with an assumption that it should be 1000 rupees based on your analysis, and you should definitely invest more and more when it goes down to 300 and 400. Now that averaging is only possible if you know the intrinsic value of the shares. If you are just averaging because somebody has told you that averaging in bear market is good, then that's completely stupid. Second is that in bull market, he used to work more on workout portfolio, workout situations. Now, what he has said. So obviously, if there is a bull market, even the good companies have traded at half price. Or even there is a some that good company has traded and given much more return. The price increase in good companies is much higher than normal. So obviously there is limited opportunity to buy undervalued company and buy them at a very significant. So in this scenario, rather than focusing on undervalued purchase, he used to focus on corporate actions and special scenarios which can give him some good earnings and capital for future gains. Fourth point that he has mentioned that he made no attempt to predict the businesses. Many times we look into macroeconomic charts and do a lot of analysis and try to predict things which are not under. That's why at Sys Capital we don't give time for recommendation because we put when we are going to achieve the result we desire. Because we can't predict human behavior, macroeconomic or other. So we completely depend on fundamentals of the company. If we've seen that company has potential to grow 10-fold, 5-fold in coming years, then so even if that doesn't go 10-fold but goes 8-fold, still it's a much bigger companies than the one we have invested. The fifth point, very important to understand for investors, is that in short term, return is more based on luck than skills. And that's Warren Buffett is saying, not me or any novel person. So he gave example, three of his partnerships, which he started in the year 1950. Two of them were giving 7 to 8% return, and third one has 25%. Obviously, this looks significant to the companies and other shareholders who feel like Buffett is giving favor to the others. But that was not the case. He invested in simply the same shares. The only thing that happened is that the first two partnership were created a little earlier. It was on, and at that time, he invested heavily in those big companies. So later on, when the market went down, he could not acquire much of those companies' shares because they were already heavy position and exposure to the stock. Whereas when the bear market comes, right at that time, a third partnership has started and he got a lot of money to invest. So he invested heavily in those good companies because he was starting from zero, and that was the reason for this good rate. So what we can see is that in short term, it's not the skills but more the timing and other levels which give you good rate. But here another example which I want to give you that why it doesn't matter in the long. Let's one of my investor has what Nifty at 25,000. Then it's other as what Nifty at 44,000. Now let's say next month it becomes 44,500. The 44,000 what one would be really happy that I am having 500 points of profit, whereas 45,000 one will be really sad that I am having 500 points of loss. But is Nifty going to be 25,000? No. We also know that going forward 5 years, 10 years, the market will be 50,000 to 1 lakh. So let's say some years later it becomes 50,000. In that time, does it really matter whether you started buying it at 24,000? 25,000 will be happy that he is having 25,000 points of profit, whereas 24,000 is also happy that he is having 26,000. But this 1,000 difference is not that significant. And that's what Warren Buffett want all of us. So don't worry if you know what something on 1st October and you are thinking that it would give you a ton of treasure if you would have invested in 26th. That's not how it is going to work when you look at things 3 years down the line or 5 years down the line. Sixth point is that Warren Buffett never thought of picking marketing everything. In the letter, he has mentioned that he doesn't mind being slightly behind the market in the bull run. His major focus was that he should go much better than the market when market is in bear, because reserving the capital is very important, which many people forget. That's why they take a lot of risk. We see a lot of investors directly starting options trading, futures trading, intraday trading, rather than investing in companies for long, because they want to be rich in 1 day or 1 month rather than being billionaire on billionaire in years. That's the difference between Warren Buffett and us, that he understands not only the point of wealth management and capital appreciation, but he was a person looking towards capital protection. Last and very important point for all of us. What Warren Buffett said is that he really wants the good bits of his book either stay the same or further decline. What he wanted to tell us is that if he has found a good stock, let's say 500 rupees, and his belief is that the company deserves a price of 1,000 or 2,000, he really feel happy if the stock was down to 300 or 400. Because in that scenario, we can buy the stocks in more quantities at cheaper rate, and for long, let's say for 6-7 months or 1 year, the stock hasn't moved. So you can actually buy a good stock of worth 1,000 rupees at 500 to 300 level for next 12 months. You can have a very good position. And once he has a good position, then he start expecting that now market should realize that the company is really good and it should give big returns to Warren Buffett and his investors. That's what we also focus on, and that's why we are not really worried about our good stocks going down, because it has given us a really good time to buy more and more of those. To conclude, the key theme of Warren Buffett's first letter was don't panic when the market goes down. It's basically an opportunity to invest more. And main point is to have patience. Without patience, we can't really succeed in stock. So you should come with a vision of 5 years, 10 years down the line, rather than investing 6 months. He also tried to So a lot of these learnings in today's market scenario, there are one example of investments is that you can also look at the portfolio, try to relate with this mate. There is tons of learning that you can utilize in your investment. Stay tuned for more knowledge sharing session and insights on other perfectly. And don't forget to subscribe our channel so that you don't want to miss any set update. Thank you very much.